A very good morning, guys. At 9 o'clock yesterday morning, the screen was completely red. Half the market had reached for exits, and by close, it was all green once again. And the price had walked all the way back to where the week had begun. This round trip is the whole story for today. This is the Tanmay Edge. You are listening to episode 52, and I am Tanmay Gurtugoti. Let's go. So let me close out yesterday's calls first. So we spoke on 5 calls. 23 145 should hold on the downside. The low was 23 229. It was an hit. 23 450 to 500 happens as an expiry. The expiry happened right between that. Then IT should lead. The IT index closed up 3.83%. 23 500 to 600 would be the ceiling. 23 600 was the ceiling. 23 557 was hit. The fear gauge stays above 15 was the only call that was a miss. And then the DIS bought another 9,054 crore of equities that was expected. So here it what actually happened yesterday and what we are looking at today as well. So Nifty gapped down yesterday to 23 229 at the open, and the open was the low of the entire day. From there, every dip was bought in. The high was 23 557 in the afternoon, and the close was 23 483, up 0.43%. Right back on that 23 500 level. The chain wanted all the week, and it was building for it. 34 stocks up, 16 down. Sensex did the same thing, closed up 0.52% at 74,650, and the bank index was barely positive, just 0.2% up. Now look underneath, because this is the part that matters. One sector did everything. IT. TCS closed up 6.53% positive. Infy was up 5.66%. HCL Tech was up 4%. The IT index 3.83% as a block. All imported straight from another record night on Nasdaq. And against that, the rest bled. NTPC fell 2.89%, Axis Bank fell 1.88%, ICICI down 1%, Power Grid down 1.38%. So the headline was green, but it was one engine pulling a heavy train. That is what happened yesterday. And on the flows, the FIS sold 7824 crore in the cash market, and the DIS bought 9,058 crores. The pattern that held for weeks is going on once again. But here is the tell most people are missing. In the futures, these same FIs are sitting net short almost 280,000 contracts of bearish bets. Even while they kept selling the cash, they are positioned for a fall. And the FIs are buying the dip, and the market is not going anywhere. And that is today's point and the delicate one. A rally built on one sector is strong and fragile at the same time. Strong because global technology is genuinely bid and our IT names are riding the global rally. Fragile because if that one engine cools off for even a single session, there is nothing underneath to catch the index. The banks and PSUs were the sellers yesterday, not buyers. So today's question is simple. Does IT show up for the second day, or does the rest of the market suddenly have to find a bid and we see a broader base buying happening? So here is what Wednesday morning is looking like. So GIFT Nifty is trading flat at 23,487. So it's a flat open. Asia is split down the middle. Japan is ripping up. The Nikkei is up by 2.51%. Taiwan is up by 1.92%. And that is technology tailwind that we are seeing. But Hong Kong is down 1.3%. The US overnight, both S&P and Nasdaq set fresh record highs, with Dow futures currently trading flat and Europe closed higher yesterday. We are looking at a flat opening on GIFT Nifty. The numbers now let's look at the numbers that actually moved overnight on the commodities as well. So Brent has climbed to 96.76, up $3 in 2 sessions, and it is knocking on 97. WTI is at 94. Gold has eased to 44.78. The dollar index is steady at 99.21, and the rupee is bleeding at 95.27, up above that 95.25 mark. Crude is going one way and the wrong way at exactly the wrong time, because on Friday the RBI gives its rate decision, and the price of oil is the single biggest input in how much room it has. India imports most of its oil. At Brent at 88, the bank has room. At Brent $100, that room shrinks a lot because expensive oil feeds straight into the inflation months out. Every dollar crude adds this week quietly takes a card out of the dovish hand we are probably going to see on Friday. And the bond market is already nervous about it. The 10-year yield is sitting right at that 7% horizon. So watch crude this week as the rate story unfolds, not just an energy story, it is remaining. Now the calendar, because today is 1DT for Sensex weekly expiry. The Nifty weekly has settled yesterday, so the action sits in Sensex and the option book there is leaning supportive. For tomorrow's expiry, there are 11 puts on the book for every 10 calls. So more downside protection than the upside bets. The level where most option buyers walk away with nothing sits at 74,900. That is the pin strike we are looking at, and that is very close to the round number of 75,000, and we have closed just under it at 74,650. So the heaviest pile of downside protection is way down to 73,000, almost 1,500 points from the current levels. So with another 1.3 million sitting at 74,000, that stands as a major support, or the second biggest support. And on the resistance side, the resistance is stacked at also almost 1,400 points higher. That is, it is standing at 76,000. That is the first real resistance that we are going to see. Around 1.8 million contracts are present over there. So the book is boxed. 74,000 to 76,000 is the 2,000 point range we are looking at, and 74,900 or 75,000 is exactly at the middle. So here is the plan, and I'm keeping the levels tight, not wide. On Sensex, 74,900 is the magnet, 75,000 is the first ceiling above it. So 74,000 is the line at which market should take support. So on Nifty, 23,500 is the center, 23,300 is the support, and 23,600 is the ceiling for now. So step 1, if IT leads back again today, Sensex holds that 74,900, then 75,000 first thing, and only above 75,000 we are going to go long. Till 75,000 doesn't break, the long doesn't go into action. Step 2, if 74,600 where the markets close currently and they break down and stay broken for first 15 to 30 minutes, the next stop would be 74,000 and then 73,500. Do not chase the first break or the first breakdown happening in the first 15 to 30 minutes. Stay put. Step 3, 2 trip wires, that is Brent above 97. We are at 96.76 right now, so that one is already live, and the 10-year yield above that 7.05 mark. It is 7 this morning, so either one firing turns the banks and the rate sensitive names. So in that session, the one engine rally runs out for cover. So that is the step 3 you have to watch for. So if you run a small account, guys, do not pick a direction the day before an expiry with rate decisions coming in the next 2 days. So the easiest way is buy one Sensex put below the market and one Sensex call above the market. A few ₹100 to pay, a defined risk structure, and you own the move in either direction. A quiet day, you will lose half of the premium. Crude or the rate chatter cracks it open, you are on the right side of the trade of a fast move without guessing which way it went. That is the only exposure I would carry into this stretch. And the same rule as last week applies. Whatever happens by 3:30 today, keep it light. Don't carry your positions tomorrow. Friday the decision lands on RBI as well. Tomorrow is the expiry. 2 events in next 3 days. This is not a week to hold an oversized position overnight. So have a great Wednesday, guys. One recovery, one magnet, one oil climbing into a rate decision, and IT while it leads. Respect 74,000 on the support side and keep 75,000 as the cap, and keep crude on the same screen as the price. So this was the Tanmay Edge, guys. If you found value in this, please share it with one trader friend who needs it right now. Subscribe to Apple Podcast, Spotify, and listen it live on rupeecase.com where it streams first. And give a rating, guys, and a review. I'm waiting for your reviews if you want to add something in the podcast as well. So